Hey, hope you're having a great day as always. This is Warren Howe. Today we're going to talk about comparing what do I personally do when I look at competition, when we compare with their peers, right, with the stock's peers. So this is actually a very useful resource, Seeking Alpha, that I use. And I use them for earnings call transcripts. Yep, whenever I want to find, a company earnings transcript if I missed it out. Obviously, the better way will be looking at the investor relations page, but I just go here because I do everything here in a way, and I look at the transcript. I read it up or I listen to the call. I want to see how confident the management is and whatnot. So I use this Seeking Alpha. Here's another function that is really cool, and I'm a premium user in Seeking Alpha. Those of you who are not premium users may want to consider, because it's actually quite affordable, and these sort of functions we got here is actually quite cool. Now. And I want to just touch on, compare stocks and funds. So you click here, you'll land to this page, which is key stats comparison. Now, if you click create new comparison, and what I want to do is I want to, touch a little bit on Redfin. Yep, Redfin is actually a real estate brokerage company in the US, but also it's a tech-driven company, which I'll be talking about in a little bit. Let's talk about them, and compare with their peers. Now, when we talk about property technology in the US, we talk about the big players, right? The ones grabbing the market share, which is Zillow, Redfin, and Opendoor. Yep. So if you want to buy and sell homes, obviously when we look at the monthly, the millions of monthly users that are visiting these websites, I would say Zillow is the most, because they are close to 300 million right now. Redfin still has from, back in 2020, they had like 42 million. But end of the day, we want to talk about why I think this is a useful tool and how it helped me to have a better, analogy when it like straight away in one comparison, right? So let me click Redfin here, and you can see the ticker symbol. Now immediately you can see related stocks within this industry, right? And they are all listed. So we got Comp, NMRK, XP, CWK, RLGY. Now I have no clue. I didn't do a deep dive on all of these companies, although I'm invested in Redfin, but I'm not, I don't have a clue on all these companies. So what I do is, okay, let me compare and let me see what I can find, right? So when you click on the compare button, you can actually see sector, industry, market cap, enterprise value, employees. Immediately, what can I find? Like, what if I was to read between the lines, what can I see? Now, understand, and this comes into whether or not, how well we understand the business model of Redfin. So I'm not going to go into too much detail, but I can tell you that Redfin is actually a good mix of a real estate agency company, because of the nature of their revenue segment, right, which is majority on transaction fees, right, commissions. But they are also having a strong AI backbone, which is technology driven, right? They brand themselves as a technology company, which I do agree, because this AI is driving all the decisions to buying and selling a home at X amount of price, because they're in a business which is 40% right now, 40% of their revenues, right? Which increased substantially from 2020, but right now is like close to 40%. And it's in iBuying, what is called iBuying. So what is iBuying? iBuying is basically they buy this property at X amount of price. Now, obviously, they have to make money off flipping, so they renovate nicely. They sell it off the premium, right, to gain that difference. So they're in the business of that. Now, there are risks involved, obviously, right? The risk is, let's say, if the property, home prices go down, they'll have to follow through and be holding inventory, which is exactly what's happening right now. They have a lot of inventory, but the beauty of it is the AI at the backbone is actually driving decisions to say, okay, this is a good buy based on historical data. This is a good buy because what's the like all the data that they capture, what is the likelihood of them actually able to sell at this amount of price? So AI in the future, we see AI driving these decisions. And that's why they are not just a real estate company, which is what we are comparing here. Yep. So no doubt they're still in the industry, which is real estate services, but it's not necessarily within that industry, because they have AI involved and they're a tech company. So this is where I personally see an inefficiency, especially when the market cap is actually priced, valuated, like in terms of valuation, it's similar to real estate companies. Yeah. So another feature that I like to use and I like to see is I ignore all these ratings because I do my own rating, but I like to see what is the sort of dividend yields that they give. Right. Obviously, Redfin doesn't give because they're net income negative, but I like to see PE non-GAAP. Yep, I like to see PE non-GAAP, comparisons. I like to see PE gap TTM, which is easily accessible, but everything is on one page, right? I like to see EV sales, right? They already give a valuation here in comparison. I like to see revenue growth. Yep. So it's arguable that Seeking Alpha may not have correct data, or they use different plots of data because, and this might be Q3, so it makes sense. If we, and that's also the importance of reading the 10K and looking at the investor relations page and reading the 10K or latest 10Q of every company. Because on Redfin, if we were to analyze full year revenues, Redfin's total revenue would be 100% increase from 2020. Yep, 2020 to 2021, it will be 100% increase. Now, immediately, I would say, okay, I look at revenue growth year over year, and I compare with all these guys. Redfin is actually not too bad, 74%, right? XP is actually 125%. Again, I did not study XP, but this gives me a good feeling that, okay, Redfin is a somewhat of a growth company anyway, although no doubt they are losing money. Yep. So revenue growth forward is at 48%. CAGR, it tells me the CAGR, which is 49%. Revenue 5-year CAGR is at 36%, which is not too bad. And EBITDA growth and whatnot, they are not EBITDA positive, so that's why it's not applicable. And another function is obviously we can look at gross margin, EBIT margin, EBITDA margin. Now, I won't go too detailed into Redfin, but immediately I can see the whole comparison, right? I can see that this is a good tool to be using straight away if we want to just compare numbers and we want to do a lazy valuation, right? So this is one function. Now let's quickly compare Redfin with their immediate peers of the big boys, right? So we got Redfin, we got Zillow, and we got Opendoor, right? These big boys. So let me click on compare and we can see. Now here's the thing that I want to take note. Zillow is actually not in the industry of real estate services. But if we have been reading Zillow's story, a majority of the segment, which constitutes 50 to 60% of their revenues, is actually on iBuying. Now, Zillow is a platform that they're actually generating revenues from advertising, right? I mean, commanding 300 million monthly visitors is actually it's huge, right? It's huge traffic. So they generate all money off, advertising, people listing on their platform and whatnot, right? Which is essentially the same platform as Redfin. But why is Seeking Alpha putting them as real estate services? Is it because Zillow actually stopped their iBuying segment, or what is it? Because actually Zillow belongs to the communication services industry, right? That is one thing to point out. The other thing to point out on why I'm bullish on Redfin is because end of the day in this segment, in this industry, it's property comes to physical, right? We have to go physically there and visit the property, and that's where they have that edge because Redfin, they hire agents, they want to be member centric, they want to be customer first, they want to take care of their experience, so they hire agents, they walk them through, and people go visit the homes and whatnot, right? So these agents are actually working off a salary and maybe some commission sharing. Yep. But at the end of the day, they have hands on both in this industry. They have AI tech, right? And they are also taking care of the traditional way of taking care of a house, right? How is a home going to be bought and sold? But Zillow, on the other hand, majority of the revenues, if you have been following Zillow, is affected from iBuying because the AI and data side of the business is not really driving good decisions because they have been losing money. Why have they been stopping the whole revenue stream? Is because they've been losing money off these purchases. They've been making bad decisions. They're losing money off these flips. So that's where I see, in terms of valuation and using this function, market cap enterprise value is way off. We have a company like Redfin essentially having a portion of the revenues which is 40%, right? Redfin's iBuying, targeting and competing with Zillow, right? 60% of revenues having a problem. And this is testament that Redfin's AI actually has a product market fit, right? And this will lead on to sustainability in the future. Yep. So immediately I can see market cap, I can see enterprise value, I can see, let's take a look into the revenue growth. Yep, revenue growth, Zillow is actually losing out. Revenue growth forward is actually losing out, but CAGR wise over the years, 3 years and 5 years, Zillow is actually more. But what is the likelihood of this AI actually performing and doing better over the years? Yep, this is something to think about. Open Door is not even here in comparison, right? So this is something to think about, and this is why I like this tool. Now, gross profit margin, Zillow is better, right? Redfin is always best to be digging deeper into the quarter, the latest earnings call, and looking at the 10K and digging into the numbers on why gross profit margins have been compressed for Redfin and why Zillow has been expanding or compressed, right? That's one of the reasons. But in a nutshell, I can look at, okay, EBIT margin is actually negative. I mean, in this business, prop tech, there's still EBIT margin negative, but we can actually see on one page, like quickly, okay, let's compare with, the cash flows or revenue per employees or whatnot. Yep. So I hope you got some value out of this today. This is the function that I use, and hopefully you guys get a glimpse of, reading between the lines when I compare valuations of Redfin, Zillow, and whatnot. So yeah, I'll see you guys in the next video. Thank you.